What's up? What's up? What's up? Danny McKinney here with the Real Estate Wealth Builders podcast. This is our second episode, and we're going to talk about private lending profits and why. It's one of my newest programs that I'm promoting and educating people on the private money lending space. So I want you guys to stay tuned. It's going to be a great episode. And we're back. I'm glad y'all are here with me. I just want to go ahead and give you guys my contact information. You can reach me at dannymckinney.com. For this program and private lending profits, you can go to Private Lending Profits Training to get a free training on my mentorship, that program that I have. Also, if you want to join the Private Lending Profits membership community, where you can get free ongoing training, you can log on there, join for free, 7-day trial for free, and you'll learn private lending. We'll teach you how private lending works, how you can make the big profits in private lending, and how I've been doing it for the last 20 years. Also, if you're looking for a quick read, we have our free handbook where you can download. If you go to privatelendingprofitshandbook.com, go there and you can get our free handbook. Also, you can reach me on DannyMckinneyTV.com, and you can reach me there on YouTube as well. So go ahead and check that out when you get a chance. But let's get into it. Let's talk about private lending and how private lending has been another source of income for me. And if you don't know me, over the last 35 years, I've been in real estate investing. I've been a real estate broker for 33 years. I've owned a mortgage company for 28 years. I've been building and developing property for the last 20 years. And I pretty much have seen everything in real estate when it comes to real estate, whether it's on the finance side, whether it's on the marketing and sales side, whether it's on the development and building side. I've pretty much done it all. But private lending is one of my strategies that is dear to my heart. Reason being is because it has given me and afforded me nice, steady income. And I'm going to get into showing you exactly how you can do it and why people should be diversifying their portfolio with private lending. Because think about it. What is the biggest institution? One of the biggest institutions in the world that basically is set up on every major intersection, on the corners of every major intersection. Banking. Why is that? Because lending money brings a lot of money. Banks make a lot of money on lending money. And you can do the same thing, but it's unfortunate that a lot of people don't understand private lending and basically are afraid of it. I talk to investors, talk to other people, they're basically afraid of it. They're like, well, what happens if I have to take the property back or they don't make any payments? Well, yeah, that's what you do. You take the property back. And in most cases, you're going to take the property back at a discounted price, which means you're going to be able to sell it and make profit on it. But I'm going to get into that later. But let's talk about my story, private lending. I've been in real estate investing for over 30 years, buying and flipping property, wholesaling, doing all of those things to generate income as an additional stream of income. But I've used private lenders for the last 30 years, 20 years, doing when I buy my properties. I've used private lenders to flip property. I've used private lenders for when I do buy and holds. I've used private lenders. Why? Because the banking industry can be just a little stressful. And I know that firsthand by being a mortgage lender. I have a mortgage company which is called Diversified Home Mortgage here in Houston, Texas. And I've been loaning money to my clients and investors for 28 years. And in doing so, the mortgage programs, guidelines, rates, all that affects decisions when people make decisions to get mortgages. And over the last couple of years, the rates and the guidelines have been changing for real estate investors. So they've made it very difficult and making it more difficult for real estate investors to buy real estate. For example, it used to be a limited number. 20 years ago, you can buy as many real estate properties as possible. Then they broke it down to you can only have 10 if you're going through a conventional or standard mortgage program uh, or a conforming type program. Uh, so they broke it down and said, well, we're only going to limit investors to buy 10. Now you're talking about 4 to 6. A lot of lenders are saying, hey, the most that you can do is 4 to 6 properties because uh, the market has changed and lenders are just a little tightening up just a little bit more when it comes to real estate investors. Well, that's where private lenders come in. Individuals like yourself who have had money or have money. They have them in 401ks, they have them in annuities, they have them in life insurance policies, different vehicles that you have investment money that's sitting there, but maybe not making the yield that you want. They're not making the return that you want. For example, I think most 401ks are somewhere between 6 to 8%. So that's conservative. However, through private lending, I've made 40% returns on my money. I've also made infinite returns on my money, and I'll tell you how you can do that. But back to my story. So I've been investing in real estate, buying property, flipping, rehabbing. I've done all of that, and I've used private lenders. Reason being because they don't give me a lot of hassle. And when I talk about private lenders, I'm really talking about individuals. Private lending, under the umbrella of private lending or hard money lending, uh, you can include institutions that use their own private funds, whether they get a warehouse line, which I've used my warehouse line to loan out money, but they either get lines of credit and they loan out their money in the institution, which means they have underwriters who are based on their guidelines. Well, using private people, individuals like yourself, of course, the guidelines are not as stringent. And that's one of the reasons why I like to use private lenders. And that's the reason why I'm teaching private lenders how to become private lenders and how they can maximize and minimize the risk in doing so when they loan their money out on real estate. And really, it's based on real estate. I mean, private lending does cover other lending assets like businesses and things like that. There are private lenders who are out there loaning money for businesses. I'm only talking about real estate, and because that's just my background, and that's where my wheelhouse is. So, private lending, dealing only with real estate, gives you an opportunity to have a collateralized or to provide a collateralized loan, which has real estate as the collateral. And to me, that is one of the safest ways to invest uh, your investment capital, because as a private lender, when you have real estate that's behind it, your risk in terms of losing money or anything like is greatly minimized because one, you're not going to loan no more than 70, 75, worst case scenario, 80% of the value of the property. And you only do that because you want to minimize that risk. In the event you have to take the property back, you are only at 80%. You're only 80% into it, which means if you have to take it back and it's worth hypothetically 200,000, and you're 80% in it, you've only loaned out 106, the maximum 160K on it. If you had to take it back and it's worth 200,000, you can easily sell that property. So that's one of the reasons why. But back to my story. So I've used private lenders for that reason that uh, they're not as stringent when it comes to loaning money out, because I teach that one, if you're going to do a private loan, you want to make sure, of course, the 80%, no maximize 80%. Most of the loans that I've done is around 70%, maximum 75%. I've done some second liens where we did the cumulative LTV or loan to value was at 80%. So I'm not opposed to going that high when it's a good deal. And when it's a good deal, that means that you've done the homework, you've done the due diligence, and you've made sure that that property is going to, value is going to sell for what it's going to sell for. You ran the comps, you see how long the property stand on the market. You have an exit strategy that's pretty much foolproof when it comes to that deal. So I've borrowed private lenders money, and after a while, I got to saying, wow, they were charging me 10%, some 12%, 9%, and they were charging me fees, origination fees for doing the loan for them. However, they didn't ask for credit. Of course, you're going to want appraisals. You're going to want insurance, title policies. You're going to want all of these things. You want to make sure the homeowners association dues or fees are caught up, because those are some of the reasons why they could get foreclosed on. But you do all this due diligence. In most cases, the title company is going to do all this due diligence. So in my past, when I've done these private loans, I'm looking at, wow, I am paying these guys a lot of money for short-term capital. And think about it. Why would you pay someone 12%, 15% in some cases? Why would you pay someone 15% for the use of their capital? Well, think about it. If you have a credit card in today's market, probably paying anywhere between 15 to 20, 23, 25%. I've seen some as high as 30% for the use of short-term capital. You pull out your credit card statement, look at it, and most likely you're going to probably be paying in the 20%, 18, 19, 20% range for the use of short-term capital. So when you pull out that credit card and you use it, if you don't pay it off at the end of every month, you're paying them a nice return for that short-term capital. So people do it all the time, but from a private lending standpoint, you'd be surprised how many investors saying, well, I don't understand private lending. I don't understand, why would I do that? Is it more riskier than buying and flipping property? Well, it really isn't. One, you're not managing a property. You're not managing tenants. Okay. One, you get to control the rate of return that you're going to use that you're going to charge for the use of your capital. So when that real estate investor who really needs you, because the banking industry and the guidelines have tightened up, they're willing to pay that higher interest rate. They're willing to take that risk, considering that all the due diligence is done and everything else is done on the property, which I teach in my program, in my mentorship program, and also in my membership program. But we show you exactly how to structure deals and there's several ways you can structure deals where you can get 20, 25, 30% return on your money, annualized return on your money. And we can show you exactly how to do that. And the great thing about it is secured against real estate. Private lending is a $1.7 trillion industry. That includes, other than real estate, it also includes other things. But it's individuals or institutions, small institutions that are taking their own capital and loaning it out. You could do the same thing. And the great thing about it, you can do it from your home. I've done private lendings, and I've helped my clients structure their own private lending deals, either for myself, because they didn't know how to do it. And I'm like, well, I'm tell you how to do it. Loan the money so I can buy this piece of property. I'm going to flip out of it in 2 months, 3 months. And then I guarantee I'm going to pay you 6 months of interest. Okay. So how's that broken down? So let's use, for example, we're going to say Ricky Rehabber. We're going to call him Ricky Rehabber, or call myself. And I need $125,000 on a $250,000 property. So the ARV would be $250,000. I'm buying it at $100,000. Purchase price of $100,000. I need $130,000. I need $30,000 to rehab it. I'm going to put in some flooring, some new cabinetry, and paint. Okay. So I'm going to go in and rehab it, and I'm going to keep it as a rental. No, let me take that back. I'm going to flip the property. Okay. And I'm asking for that loan for 4 months. Okay. That private lender, basically, the way I helped them structure it was, okay, I'm going to need it for at least 4 months. It's going to take me a month or two to rehab it, put it on the market. And I think I have with my data bank of individuals who are looking for properties, I probably can get rid of it, or I can sell it to one of my investors who are looking for a rental property that they want to have. And they'll pay me retail price for it. So in most cases I have in most cases I have the exit strategy already in hand. I already have a buyer uh, but that's just me. But that's not everybody. But if you're working with a good real estate investor or rehabber, a lot of times they do have those exit strategies already. They have investors who will buy these properties from them immediately. So, they're in and out of there 4 months. But the way I structured this particular deal, I told the private lender, I said, look, I'm going to pay you 6 months of interest regardless. If I get the really this thing in 3 months, I'm still going to pay you 6 months of interest. He said, okay, fine. I'm going to need, I'm going to want 12% interest rate. I told him that would be fine. I have no problem paying that 12% interest rate, which is 12% annually. So that breaks down to 1% of the loan amount per month. So that would be my monthly payment for that loan. We also structured where I deferred the interest payments. So I didn't have to pay any payments while I was rehabbing and marketing the property, whatever. So I structured the deal where it all came at the end when I exit out the deal in 6 months or 4 months or whatever, how long it took me to do it. He was okay with that. And at the same time, he took the 12%. He also said, that's fine. You don't have to make any payments until the end of the deal. And he was charging me 3% origination fee. So I had to pay 3% of the loan amount, which was $3,700, $3,750, just to do the loan. And I was also got him to set that on the back end as well. So the way you structure a lot of these deals can be, very advantageous for you as a real estate investor, because you're dealing with individuals who are looking for the best deal and want the best return for their money. And of course, they want to minimize the risk. Of course, I try to advise my private lending students that, hey, make sure you work with a professional real estate investor, one who has a track record. Everything is not guaranteed. However, you want to work with someone who has a track record of doing and buying and flipping property, because you want to know they know how to get out of the deal. And because I have my experience and I do a lot of deals here in Houston and also in Texas, I have access to make sure that the deal is going to get done. And also I can assist with my expertise in terms of helping them make sure that they're going to get their money and make sure that they know exactly what they're doing. So, so at the end of the day, that investor made a nice return for the use of their money. And so we were able to get out of that deal in 4 months. And in 4 months, I was able to pay him 6 months of interest, pay him plus his $3,750 for the origination fee. And then also in that particular deal, he wanted a part of the profits, or I suggested I would give him a part of the profits. So at the end of the day, because I was able to put $130,000 into that property, I was able to sell it for $230,000. Okay, it was worth $250. I got rid of it, sold to an investor for $230. So I made $100K on that particular property. So he was able to negotiate a 10% of the profit, which means he made an additional $10,000 profit sharing on that deal. Why did I strike that deal? He didn't ask for an appraisal. Okay. Of course, we closed at a title company, so we got title policy. All the paperwork was done through the title company, so I didn't have to hire an attorney to draw up paperwork. He didn't have to hire an attorney to draw up paperwork. Basically, I walked him through the whole process. It was very easy for him. And at the end of the day, he was paid nicely for the use of his money in 6 months. So he made $10K. plus the 37K plus he made 6 months of 1250, which was what is that, 72,000, 7,200, an additional 7,200 for the use. I'm sorry, 7,400, 7,500 for the use of the money uh, over that over that 6 month period. So if you take that 10K plus 75 plus 37, so you're looking at roughly about 22K, and that's in 6 months. $22,000 for the use of that money over that short period of time. So, um, and then the plus thing about it was I was able to do it with him again on another deal within uh, right during that deal, before that deal even closed. I was able to do another deal with him uh, uh, before that deal closed, and use his money again for another 6 months. He roughly made about the same, a little bit less, but he almost made 40 something thousand dollars, or roughly around 40 something thousand dollars for using the same 100,000 on both transact 130,000 on both transactions, and walked out of there with, if you look at it, you add it all together, roughly about 40 something thousand dollars, 40% return on his money in 1 year. So those are the pluses that private lending can afford you, and how you can work with private lenders, and how you can become a private lender and make 20, 30, 40% return on your money, working with real estate investors like myself, who are experienced, who know exactly what the market does, uh, and how to minimize the risk for you. Um, so that's an example of how private lending works. Um, Now, to get access to private lending profits, I mentioned to you that you can go to those websites, and actually you should be able to see the links on this page, on this podcast page. Also, you can go to dannymckinney.com, or you can go to the websites that I have listed. Um, so if you want to learn about it, you want to get involved in it, you want to be a private lender or start your own private lending business, then you definitely want to join my private lending profits program and get involved, where I mentor you, or you can join the community and uh, be involved with like-minded individuals who are doing this on a day-to-day basis, making great returns, making great partnerships, sharing great ideas, and learning how private lending can be, and also diversify their portfolio, which is more of a secure and predictable way of generating income, passive income for your portfolio. Now, another thing I want to talk about is uh, the pros and cons. Of course, there are some pros. Of course, control. You're able to set your own terms as a private lender. Um, you know, and I just gave you some examples of how you can structure some of these deals and make nice returns on your money. Um, um, so, being able to have that control, you can't do that with stocks. Invest in stocks. You can't do that with annuities. You can't do that with Bitcoin. You can't do that with bonds. You have to go on based on what they're projecting those bonds and those stocks are going to perform, and of course is uh, uh, how the market is uh, how the market goes. So, uh, but private lending, you can structure your term, which makes it more predictable. So that at either, if you're collecting your interest on a monthly basis, you're going to know that what that monthly payment's going to be. So that makes it predictable. Also makes it secure, because why? It's secured against real estate. You get a mortgage or a deed, depending on what state you're in. You get a deed of trust against that property, which means that if in the event payments don't come or whatever, you can foreclose on that property. And you're creating a security, a lien against that property in the event that they don't make any uh, payments. You can take that property back, and it's all done through the title company. So it's not something that you never pay directly to a private lender, or a real estate investor. You always pay through, or you send your money to a title company or an escrow officer or an escrow attorney to close your deal. which we teach in our program. We teach you exactly how all that works, and we break all of that down, especially in our mentorship program. In the mentorship program, of course, you work directly with me and my team, and we show you exactly how to do private lending and how it works. And we advise you on how that works with the title companies and everything else, and how it basically works. Um, and of course, it's a steady stream of income. And think about it: the property is insured, so in the event of a catastrophe, the property uh, is insured. So that minimizes your risk in the event of a loss or a fire, or hurricane, or whatever the case may be. Then your property, you know that you're insured, and you're going to be as a lien holder or mortgagee on that. A lien holder on that mortgagee clause when it comes to the insurance company. So therefore, in the event of a loss, they're not just going to pay the Ricky Rehabber or the real estate investor. They're going to pay you and make sure that you get paid off in the event there's a total loss. Another pros about private lending is that you get higher returns. Okay. I mean, you can structure your deal where you're making 20, 30, 40%. Who's doing that? Who is getting that? And the great thing about it is these real estate investors are willing to pay it, just like they're willing to pay it on their credit cards. Well, they're willing to pay it because they see the profit potential on the flip side. And the more they have availability of capital from you or from private individuals like yourself, the availability of that capital is worth more to them than having to go through a bank where they're going to make them go through and jump through hoops, and they're going to have them go through, sniff tests and make sure credit and everything else is in line. As a private lender, those things you consider, but you mainly are looking at the deal, and you're doing your due diligence on your deal. And in my programs, I show you exactly how to do the due diligence, where you find the information to make sure that you are making an informed decision to loan on those particular type of deals. But to me, this strategy is one of the best strategies because of those reasons. And then, of course, you don't have to manage property or tenants, which is very time consuming. Think about a lot of my students and a lot of my private lenders. They are full-time employees, and they've built up a nice portfolio of investments and capital that is just sitting there and not making them a lot of money. I show you exactly how you can go through a self-directed IRA and fund your particular private loans and defer your taxes by putting the profits back into your IRA and using it again over and over again. And this is not a one-time deal. This is something that you can do over and over again. And if you build up a portfolio of real estate investors who do this on a regular basis and they can perform, then you have a lifetime. I have private real estate investors that I do private loans for, and I have real estate private lenders who've done private loans for me over the last 10, 15, 20 years. And we still have those relationships that I can reach out to them and say, hey, I need this deal. I'm looking for this deal. And they're like, no problem. I've made money with you before. So let's go. Let's make it happen. Boom, boom, boom. And that allows you to build your wealth through private lending. And that's one of the key factors of this program, is because private lending, or the strategy, private lending allows you to do that. Now, of course, the cons, and really all the other cons really are overshadowed by the pros. But one of probably the worst con would be if you had to take the property back. Well, in my program, of course, we show you exactly, or tell you exactly what the process is to, if you have to foreclose or you have to take the property back, what that process can be. But the great thing about it, as I mentioned before, is that if you're only loaning 70% of the value and you have to take the property back, how many people would want to buy a property at a 30% discount? Everybody. Any investor would want to buy a property at a 70% discount. So you can unload that property, or you can keep it for yourself, rehab it if you want to, or owner finance it, or all kind of ways you can structure deals. But you now have a property at a discounted price that you can either sell or hold in your portfolio and generate income that way. Um, so as far as the cons about private lending, I mean, it happens. Having to take the property back, it happens. But if you structure deals and you're working with good professional real estate investors, the likelihood of that happening is probably 10%, less than 10% of that happening. You can always structure or restructure your loan to help that private investor, a professional investor out if he needs more time, or to help them structure. Or you can jump into a partnership with them and say, hey, we're going to work this property and we're going to hold it as a investment property and do whatever you need to do to get the property cash flowing for you guys. So there's many things that you can do. But as a private lender, security, being able to control, insured, you're not managing property, you're not managing tenants, you don't have to deal with repairs and all those things, which is it's truly a passive way to earn income. To me, I think it's far better than most strategies in real estate that are out there. Um, as I mentioned before, uh, one of the things that, and one of the main reasons why real estate investors uh, come to you, and we'll show you exactly where and how you can market yourself, where you a go-to person in your community or nationwide or whatever, or depending on how big you want to get with the private lending business. If you decide that you want to participate and work with us, um, we'll show you exactly how you can market yourself, where you have private professional real estate investors blowing up your phone, reaching out to you, wanting to partner with you for the use of your capital, and they're willing to pay you a high return for the use of that. So the scarcity of capital in the markets is one of the reasons why real estate investors are looking for private individuals like yourself to help them on their deals. And like I said, they're willing to pay higher rates or higher returns for that to you, just for the use of your capital. And the market has gotten so tight, the guidelines have gotten so tight to some real estate investors, it's not even worth going to banks because they're very time consuming. You got to cut through a lot of red tape just to get loans on some particular deals. When you go to a private lender, who, especially an experienced private lender who understands and knows how to do the due diligence, and you present as a real estate investor, they present to you uh, a great package that shows, hey, this is why this property is worth this. This is why this property is worth that. And we provide, in my mentorship, we provide a uh, evaluator, deal evaluator program for free that you can use to evaluate your deals. And in this program, it would show you and break down for you and the investor what the returns will be, uh, uh, what the comps are, uh, you know, why this deal is going to make sense. And it's a very simple system that you can plug into for free if you join private lending profits programs. And we give you access to that for free, and then you can utilize that to determine whether or not your deals are going to make sense. Or if you join our mentorship, of course, you can have us to underwrite your loans or your loans for you, and we can make sure that your deal is a good deal before we can advise you, and we will advise you that, hey, yeah, I would move forward on this deal because it does make sense. But that's all in the program, and we'll let you know how to get access to that. Uh, but so access to capital is one of the key things that these real estate investors need you and want you to help them produce these deals. And just think about it: you got uh, Blackstone and J.P. Morgan Chase, all these major investment funds and companies who are investing in single family homes, which means it's making it very, very competitive for real estate investors, the mom and pop real estate investors, to buy these properties. Well, as private lenders, more private lenders we bring in the deal allows us to generate income, and also help our community in terms of growing wealth in our community. So private lenders are definitely needed, and my private lending profits program definitely will help you. Any questions that you may have in terms of wanting to learn, wanting to invest, or wanting to diversify your portfolio with private lending or private lending profits program. Um, I mentioned before um, some of the ways to make money in private lending. Of course, simple interest is one way. Upfront finance charges, that's another way. Back end profit sharing, which you can do. You can also do, JV type deals where you have real estate investors who say, "Look, I don't have the earnest money. They require me to put $5,000 earnest money." Well, you can also participate with them on those particular deals, and maybe partner with them and get 50% of ownership of the deal, or get 30% ownership of the deal. And just think about it. Once you get the deal done and all your money's paid back, you do this deal with a landlord who's going to hold the property, and the landlord uses your capital to purchase, rehab the property, and they refinance the property and pay you off, but you still have an ownership interest in that property because you did a profit sharing agreement, or you did a JV agreement with them where you uh, uh, now own a part of that property. But think about it. You've gotten all your investment money back because they refinanced it and paid you off because you were the lender before when they purchased the property. And just like a bank, anytime you refinance the property, you're going to pay off that lender because that refinance loan is going to want to be in first lien position, just like you were in first lien position as a private lender. They're going to want to pay you off. So once they pay you off, then now your income, your return has been returned. I mean, your investment has been returned back to you. So you no longer have any more skin in the game. However, that property is a rental property and you have part ownership in it. You are receiving infinite returns because now you have nothing in it and you're still getting income from it. So uh, this is one way that you can generate additional income and returns for doing, or as a private lender doing these type of programs. Like I said, you can fund earnest money. Someone says, "Well, I need down payment money and I don't have it." Well, you can participate in that and do a transactional funding type deal. So there's many ways, and we teach those many ways in our private lending profits program. So definitely check it out and see if there's something that may be uh, that you would want to add to your portfolio. And it's not changing you from whatever you're doing now. You could be doing stocks, bonds, crypto, whatever, but you may want to look at private lending as a way to diversify your portfolio and earn better returns that you control, as opposed to saying, "I'll put my money in something and I don't know what they're doing over there, but I just hope that they perform well so that my returns are going to be good." Well, in private lending, you control the terms. You control the rate of return for the use of your money. And to me, I think that's far better than any other investment that's out there. Plus, you have real estate as your collateral. You have real property. You can go put your hands on it. Someone says, "Well, I don't know what my stock is doing over there at ABC company." Well, you're not going to be able to go over there and say, "Hey, let me go put my hands on the business. Let me go in there and check out what's going on in the business." That doesn't work that way. But real estate, you can say, "Hey, uh, I have a loan on this particular property. I want to go see what's going on with it." So that's a major plus as well. And I think I mentioned the infinite returns. Those are ways to get nice returns for the use of your for the use of your capital. So hopefully this has been a eye opener for you. If you ever thought about what is private lending or how do these guys make money in private lending, well, definitely you may want to check out our program, which is Private Lending Profits. As I mentioned before, you can go to Private Lending Profits Training for our mentorship program where you work with us. In that program, you're going to get over 80 tutorial videos. You get to work with me directly. You get 4 bonuses along with that. And you get to work with me where we can either help you underwrite your deals or help facilitate your deals, or you can partner with us on some of our deals that we do And then also you get access to the membership, the membership community, where you can partner with other private lenders, or you can uh, look at the deals that are in the community that need to be funded by our real estate investors who are part of the community. So you get to share with like-minded people, engage with like-minded people, share ideas, share ways to make money, and just be a part of the community, of the private lending profits community, where we're probably going to be one of the largest private lending communities. And I'm not talking about institutional, I'm talking about private individuals like yourself who want to learn how private lending works and then also grow their wealth through private lending the secure and predictable way. We also have the membership, PLP. You can go to PLPmembership.com and join the membership. It's free for the first 7 days, and it's $49 after that. So you can join that, and we have weekly live training. We also have coaching, and also there's a private lending. There's a lot of material on private lending and how it works and everything else. And then of course you get access to the community for free, and share your experiences with other like-minded private investors and private lenders that are there. And then if you just need a short read and you want to, okay, let me find out more about it, you can go to Private Lending Profits Handbook, and you can get my download for free, my Private Lending Profits Handbook. And it kind of breaks down everything. It's an e-handbook, so it's a digital handbook that you can download for free. And it gives you everything you need to know about private lending and how to get started, and and how you can be a part of our community. So again, private lending. If you're thinking about doing private lending, I know a lot of you guys have heard of it, but don't understand it. The ones that do and the ones that don't understand it, definitely reach out to us, and then we can definitely guide you in the right direction and help you generate more wealth through private lending. And I think that's going to be it for our second episode. If you have any questions, feel free to reach out to us. My name is Danny McKinney. I'm the host of the Real Estate Wealth Builders podcast. Look forward to the next episode. We're going to bring you real estate investing opportunities. Talk to you soon. Peace.